Hi guys, welcome back to our educational video, and in this video I'm going to talk about what is trend reversal. And in this slide I'm going to take the title as the from trend to trap, how to detect a reversal in time. Well guys, before we go to chart, I'm Alex, your technical analyst from FundYourFX. Let's go straight to the chart. From trend to traps, how to detect a reversal in time. So first, what is trend reversal? Well, a trend reversal is a point where the price structure of an asset change its behavior. For example, the price always makes a new high on the bullish momentum, but in the next move, the price failed to continue making a new high and starting to form a low and lower lows. When the price starts to form lows, that's the point where there's a signal that the trend reversal is going to be happening. Okay, the next one is type of trend reversal. You have to keep a note in this one because this is very important decoding the behavior of the chart pattern, of the chart reversal, the trend reversal. You really have to study this slide. Okay, the first one is the sideways transition. The sideways transition or the normal transition on the bullish reversal, price make lower peak, lower trough, lower peak, and lower trough. And then when the price changes its structure, it's going to be like this: lower peak, lower trough, lower peak, lower trough, lower peak, and then the price failed to create another lower trough, but instead the price makes the higher peak, the higher trough, and then of course higher peak, higher trough, and the higher peak on here, it's the bullish trend transition confirmation. And then on the bearish reversal, we have the price makes higher peak, higher trough, higher peak, higher trough. That's the normal coding for the bullish structure. When the price about to change from bullish to bearish, in this case bearish reversal, the price makes and change its behavior to higher peak, higher trough, higher peak, higher trough, and then the price starting to fail to create another higher peak, and then it create the lower peak instead of higher peak. So the price make lower peak, lower trough, lower peak, and then the last lower trough, it's our trend confirmation as the trend already reversed. Then on the number 2, we have the reversal transition or aggressive transition. It's quite different. What is the main key point to differentiate between the sideways transition or the normal transition and the reversal transition or aggressive transition? We are going to discuss this in the next slide. Well, okay, first, in the bullish reversals, the price makes lower peak, lower trough, lower peak, lower trough as usual, and then the price change from the lower peak, lower trough, lower peak, lower trough, then immediately the price make higher peak. Okay, the price immediately makes the higher peak, or you should say the change of character. The change of character happen when the price break its previous lower peak. And then the price makes the higher trough, higher peak, and then the continuity of the bullish reversal is on the higher trough. Then on the bearish reversal, the price makes the higher peak, higher trough, and then higher peak, of course, another higher trough as usual, the bullish structure. And then when the price about to change to the bearish momentum or the bearish structure, the price makes the higher peak, higher trough, higher peak, higher trough, higher peak. After it creates the higher peak, the price failed to create another higher trough. Instead of creating the higher trough, the market itself or the price itself starting to create the lower trough. That's our change of character or the behavior change in the structure market. And then the follow-up is the lower peak, lower trough, and then the lower peak. It's the trend direction reversal has been confirmed. Okay, so the next one, let's go to the early sign of a trend reversal. An easy way to determine if the trend is about to lose momentum to continue its price action is 1. Price has already made an exhaustion for bullish or falling knife for bearish in the chart. Wait, let me draw it for you. If you are seeing in the market the price move like this, okay, the price may reject on the 66% Fibonacci tool or 61.8 Fibonacci or 50%, almost make another 50% retracement, and then suddenly on the primary trend it makes like this. This one, okay, this primary trend longer than this one. So we can determine this as an exhaustion. Okay. The final squeeze in the market, which I call an exhaustion. Also on the Dow theory, he are discussing about this market phase. For a falling knife for the bearish side, the price should look like this. Okay. Retracement still on the 50%, 60%. And then the primary trend move in much more longer time period. This is also called as time overbalance its price. Okay. So this one, the primary trend or the primary movement is longer than the previous primary movement. And in this movement, we are going to call it as the falling knife. Okay. So let me delete this first. And then number 2 is a behavior change. A behavior change has been seen in the market price failed to make higher peak for bullish and failed to create another lower peak in the bearish trend. Should be like this. For the bullish side, okay, the price failed to make another higher peak like this. Okay. And then for the bearish trend, the price failed to create another lower peak. Okay. Like this. I mean the lower trough here. Okay. The price failed to make a lower trough and lower peaks on the bearish trend, and on the bullish trend, the price failed to make higher peak and the higher trough. Okay. Next slide, we have reversal patterns. This is the chart pattern that you want to make sure if you are seeing a trend reversal, you want to make sure that this kind of reversal pattern really appears in the chart. Well, it was optional. This is some type of pattern that you have to keep in mindful. Well, the number 1 is rising wedge. Rising wedge should be look like this. Okay, I'm going to talk about the chart pattern in the next episode. Right, rising wedge should be look like this. Okay, the price make a consolidation in upward momentum and then it breaks the lower trend line. The falling wedge is for the bearish to bullish trend transition. Should be like this. Boom, 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 and then up. This was a falling wedge. Okay. And the head and shoulders should be easy. Head and shoulder, it's going to look like this. Head and shoulder. Okay. And then inverse head and shoulder is head and shoulder. You should inverse it for the bearish to bullish trend transition. It should be like this. Okay. And the double top, of course, double top look like this. Mountain. And the double bottom look like this. W. And symmetrical triangle. This is very rare pattern in the chart because I haven't looked this kind of chart in this kind of pattern in the forex chart, but it should be look like this. Very long. Price consolidating like this, and then it could reverse in the downward or the upside momentum. Okay, great. So let me delete this first and let's go straight to the next part. Okay guys, let's go to the next confirming the reversal. Okay, first it's sideways bullish. For the sideways bullish, the price makes the lower trough, lower peak. This is one lower trough, lower peak, lower trough, lower peak. But instead of creating the lower trough, the price failed to make lower trough and already makes the higher trough. This is our first signal that the trend reversal might happen. Okay, and then the price creates higher peak. This is the signal, another signal that the bullish structure or the bullish momentum have already entered the market. And for the higher trough, the price really makes the higher trough. This one is our validation that the bullish market or the bullish structure or the bullish momentum has fully entered the market. And if you wanted to wait for the breakout of the higher peak here, the previous higher peaks, this is your trend reversal confirmation. Okay, so let's go to the bearish one. For the bearish, we have the higher trough, higher peak, higher trough, and instead of creating another higher peak, the price failed to create another higher peak and it creates the lower peak. This is our first signal that the trend might reverse. And for the lower trough right here, this is our confirmation that, well, the bearish momentum has fully entered the market. And for the lower peak, this is our confirmation that, okay, right now the bearish momentum have entered the market. And for the breakout of the lower trough, okay, the previous lower trough right here, it's our bearish trend reversal confirmation that the bearish trend have moved from the bullish trend as reversed after the bullish trend. Okay, so the next one is the bullish reversal for the aggressive bullish transition. If you are a smart money concept trader or the Wyckoff trader, okay, the price makes, wait guys, the price makes the lower trough, lower peak, lower trough. Instead of making the lower peak, the price makes, well, a higher peak. This is our change of character, okay? And then the high trough, it's our confirmation. Why? Because instead of, well, the price continuing making the low trough, the price already makes the higher trough. This is our confirmation that the bullish momentum has fully entered the market. If you want to wait for the confirmation, please wait the price to break the higher peak. If the price already creates or breaking the higher peak, the previous higher peak right here, we can be assured that the price or the structure have been changed to the bullish trend. Okay, this is our confirmation. The breakout is our confirmation. Okay, so the next one is the bearish reversal or the aggressive bearish transition. For the bearish one, the price makes, well, higher trough, higher peak, higher trough, higher peaks. Instead of creating another higher peak, the price failed and creates lower trough right here. Of course, the lower peak right here, it's our signal that the bearish momentum or the bearish volume has been entered the market. Okay, so and then after that, if you want to make sure the price should have really confirmed its bearish momentum or bearish volume, you have to wait for the breakout of its previous lower trough right here. Okay, so the next one is the common mistake or fake out. Well, catching a overpriced level or a falling knife. If you are seeing the price really makes a crazy primary trend, it should be look like this, okay, boom, like this. Okay, you should have not option another long position. Why? Because after the price really create this kind of movement, often the time the price makes well, the secondary reaction makes the bearish structure like this, even though you are seeing there is a demand around here. Okay, the price right here already made the bull bearish trend. That's why if you are buying here, you see, this is ABC correction, I buy here, but the price failed to create another higher peak. Okay, the price failed to create like this. For the falling knife, should be like this. Okay, boom. Okay, wait. That's ugly. Let's change it like this. Okay, same case as the overpriced level, okay, or exhaustion level. If you are going to buy, you are seeing, well, this is demand right here, you have to wait for the demand. But instead of looking for the short position, if you are seeing there is a too higher trough right here, you should change your view to bullish momentum or the bullish structure trend reversal, well, pattern. Okay, the second one is not waiting for the confirmation. If you are wanting to know what is the right confirmation, you should have watched our previous slide in this video. Okay, I have explain to you what is the confirmation in this, well, type of type of trend transition or trend reversal. Okay, the last one is stuck in minor trend. If you are seeing the price move like this, then the secondary move like this, and then the primary, and then the secondary move like this, well, you often a swing trader. Why? Because you want to look for a bigger picture, and on the bigger picture, often the time, price makes, well, minor structure like this. After you are looking closely and you are only focused on the minor trend right here, you see that, well, the price already made a change of character, the price already made a signal that the trend reversal might happen. Okay, you start entered here, but, well, look, the price failed to enter here. The price failed to continue lower as your bullish, the bearish transition. Instead of creating the validation of the bearish transition, the price shoot up. Why? Well, because you are stuck in the minor trend. How to overcome this one? Go to a higher time frame. Okay, go to higher time frame. Okay, wait. Go to higher time frame. Why? Because when you are seeing the major trend or your major movement in 4-hour chart, in the 4-hour chart itself, the price have very big or very noisy market structure like this one. You want to make sure that you have to smooth out this kind of jagged edges or the minor movement to the higher time frame. If you are stepping up your time frame to the daily time frame, you should have not seen this kind of minor structure. Okay, so the next one is the final tips. Trends tend to continue until there is a definitive signal of a reversal. I have quoted this from the Charles Henry Dawes from Dow Theory. Okay, if you are not seeing definitive signal of reversal, you haven't seen the change of character, you haven't seen any chart pattern that's going to reverse the trend itself, well, you should have not opt another different position. If you are going to bullish position or long position, you should always on the long position until there is a definitive signal of reversal. Okay, that's the final tips. Okay, let's go straight to the live study case on chart. Let's go to the chart. Okay, so on the chart itself, I have been plotted some of trend reversal around here. Okay, let's do some study case. This is our aggressive bullish trend transition like this. Okay, the price makes lower peak, lower trough, then lower trough, and this is the lower peak, and then this is the lower trough. Rather than the price makes another lower peak to continue its bullish the bearish momentum, sorry guys, the price makes the higher peak. This is our signal that the price, the structure or the trend is going to move to the opposite direction. Okay, and then here the price make the higher trough. This is our confirmation that okay, the bullish structure or the bullish momentum have really entered the market. Okay, and then the breakout of the previous chart peak is our trend confirmation that, well, the bearish has ended and now let the bull run. Okay, look here. Then the bullish run. Okay, right here it's the trend transition for the bullish to bearish. It's failed. This is why you have to wait for the confirmation. Why? Look here, okay? You see, okay, this one is change of character and the price already makes a lower trough, and then the price failed to create another higher peak for the bullish to continue. But right here, if you are entered here, this is your mistake. Why? This was on the daily chart. This was on the major time frame. On the major time frame, you have to wait for the confirmation. Why? Because the major time frame, you should have wait for the trend to really confirm its reversal. Okay, if you are entered here, well, you set your take profit around here or maybe around here at its previous demand level, but it failed. Your stop loss is it's here or here. It failed. Why? Well, because you haven't wait for any confirmation. The confirmation is to wait for the price to create like this, another lower trough, and the breakout of the previous lower trough. This is your trend reversal confirmation that the bearish trend has been validated in this chart. Okay, so well, also if you say, well, Alex, there is a pattern which called the head and shoulder pattern. If you want to trade on head and shoulder, you have to wait for the neckline breakout, which is around here also, and there is no breakout. This is why the trend transition is failed. This is why, guys, I really love having a live study on the real chart. We can see a failure like this, we can see a perfect trend transition like this. Okay, I hope you really understand this. Okay, so guys, thank you so much for watching. Thank you so much to take spare time to study with me, and I hope you have fantastic trading journey, guys. And if you haven't subscribed to our YouTube channel, please subscribe to our YouTube channel, and don't forget to like and comment in this video. And guys, by the way, don't forget to follow our TikTok and Instagram so you can get notified if I make some kind of video like this. So guys, thank you so much for watching, and I'll see you in the next educational video. I'll see you there. Bye bye.